Welcome back to Stats Daily. Today we'll be looking at the financial condition of the Big Four banks of Australasia. Using Benjamin Graham's criteria for a good investment, we're going to be looking at how the current assets weigh up with the current liabilities of these banks. The ratio that we're analyzing here is called the current ratio, which is essentially measuring the liquidity of the company. If there were to be some unexpected future event, an economic disaster or black swan event, how well is the company prepared to take those shocks? This just gives us a broad understanding of the total assets and the total liabilities of all the four banks. As you can see, all four banks have total liabilities and total assets that are greater than $1 trillion, trillion with a T. This is the current assets and the current liabilities of the different companies. This is just a quick visual display which leads us into the more important current ratio, which is just the metric that we were discussing at the start. It's simply the current assets divided by the current liabilities. As you can see, the red line here shows that all four companies meet the 1.5 current asset to liability ratio for a good investment by Benjamin Graham. But it's kind of good to dive a bit deeper and see where the risks are associated with these different banks, since these banks do operationally differ very slightly. As you can see, if we look here, the risk associated with the retail bank, such as CBA, a retail bank oriented, is that high inflation and stresses on mortgages can potentially increase default rates. On a business banking perspective with NAB, operational costs and cost push inflation, as well as a credit shortage, could lean more businesses towards bankruptcy. With the institutional banking, complex and long-term financial instruments mean that ANZ is more susceptible to greater and uncontrollable economic changes. Now obviously these are very drastic, but these are the very extreme rare risk cases that we do have to be aware of. Finally, the quote of the day. Essentially, what Charlie Munger is trying to say is, if you don't fully understand a business like a bank, it's not worth investing in. Thank you. Stay tuned for more Stats Daily.